All right, let's get started here. We have the S&P 500 was up 0.7% today. You had the NASDAQ slacking off a little. It was up 0.5%. But the real workhorse today was the Russell 2000. That was up about 1%. So you're still seeing a little bit of that gravitation towards the small caps there. People are trying to find some value, trying to find, okay, we've got the tech sector. It's up like 30-something% on the year. You've got at the halfway mark, you got discretionary up 18%. Where can we find some value? Because right now it's like, are we trying to get water out of a stone at this point with buying more into tech stocks? And so that's what a lot of traders and investors are faced with right now. So you're seeing a gravitation more towards the small caps. You're seeing the Qs rebalance. So you're seeing some of the non-FANG stocks actually starting to rally as well. So what I want to do in this video is, in this live stream actually, is make sure that we go through each of the sectors, look at the indices as a whole. We're going to look at the S&P 500, the NASDAQ, the Russell 2000, make sure everything's kosher there. And then we want to start looking at, all right, what's the market doing ahead of tomorrow's CPI report? CPI expected to be 3%, 3.1%. It was 4% last month. So they're looking for a big drop. They're down almost a full percent. Core, however, is only expected to go down to 5% from 5.3. Your core is a little bit more stickier, and that's what the Federal Reserve is probably the most concerned about. We've seen headline inflation drop, from 10+% all the way down to 4% currently. And a lot of that's been due to the drop in energy prices, but you're not seeing that happen a lot in the real estate prices, like with rentals and other areas, or with food. I mean, you're starting to see a little bit, but it's not been much. Most of your gains has come as a result of the drop in energy prices. So with the CPI report tomorrow, that's what you would consider a pretty significant headline event, risk moment for the markets. If it comes in hot, that's going to pick up the conversation. Do we need more than two additional rate hikes before the end of the year? Do they need to go ahead and do back-to-back rate hikes? And so that's the kind of conversations that you're going to look at if it comes in above the 3.1%, or if the core comes in hot as well. If it comes in light, then they're going to start talking about, okay, maybe we don't have to do the 2 rate hikes. And so those are essentially the 2 camps that you're going to be dealing with tomorrow when that CPI report comes out at 8:30 p.m. East, or 8:30 a.m. Eastern time. And big shout out to Sam and Skyheart for already being in here. Glad to have you guys in. And what we also want to do is think about the CPI report. I didn't make any new trades today. I actually trimmed a little bit of my gains in my PayPal trade, but overall I actually trimmed a little bit off of the portfolio today ahead of the CPI report. I wanted to make sure I was walking away with some of the gains that I made today, in case things were to go, not so great tomorrow as a result of the reaction to the CPI. So all eyes are on that. Let's go ahead, get into the charts. But first, make sure that you like and subscribe down below. You can also click the join button to get all my market videos that I provide each and every day to members there. Really good value. You're also supporting this channel in the process. And you're going to get updates like watch lists each and every day, videos about some of the best trade setups that I'm coming across, as well as updates on all the big tech stocks and on the market as a whole. So really a cool feature if you like what I'm doing here. So like and subscribe. Let's go ahead and get to the charts here. All right, let's pull up the first chart here. That's going to be SPY. And with SPY, we talked about this little double top that has been forming. Price needs to get above and over this one, because this is going to be the resistance going forward. A good chance that we test this tomorrow, especially if the CPI comes in light. 444, you're less than 0.5% away from testing this level. That's the next challenge for the market. If it can break through that, I think you're going to attract a lot more buyers. People still worried that, okay, the market's not going to pull back now. It's getting ready to, push even back higher. You're going to hear talk about going back to all-time highs again. You also have right here, if we were just to go ahead and take away everything, all the lines off this chart, you have a cup and handle pattern. So you have this cup, and then you have a handle pattern. Now, a lot of people like to see it at the lows. I don't think it matters with a cup and handle pattern. I think sometimes they can even act as a continuation pattern, like what we're seeing right here, where essentially the cup and then the handle, and then once it breaks above this yellow line, then you have a confirmed cup and handle pattern breakout. So if that ain't able to happen, and yes, I just said ain't, watch this 20-day moving average. I'm from Florida, man. People say ain't down here all the time. 20-day moving average. We've tested it 2 out of the last 4 times we've traded. It's held each time. And then the previous time that we tested, that was back on June 26th, that held as well. So there's definitely some support here at the 20-day moving average. Also worth mentioning, because you don't see the purple box there anymore. We did fill that gap today. So that was also good. Actually, we filled it a couple of days ago, but we refilled it, I guess, today as well. So all positives for this market going forward. Notice the volume. It's a little bit on the light side. I would like to have seen that a little bit stronger today, but we are in the middle of the summer. Summer tends a lot lighter in terms of volume. For whether you're bullish or bearish, you just don't have as much activity. That's why you're seeing some very slow days. Even today was pretty slow. Man, this is actually a pretty hot take here by Skyheart. I asked ChatGPT to calculate CPI for July using public data. It said around 7% compared to June. Man, if it came in at 7%, it would be an absolute market meltdown, I think. That would be crazy. Yeah, we got a long ways to go on some of that AI. I actually think that the inflation that we're reporting way higher than, or is way lower than what the reality it is. I mean, I think Salesforce today just announced that they are raising all the prices on their products by like 9% across the board. That doesn't sound like deflation or inflation coming down to me. That sounds like quite the hike in pricing, and I'm sure that's not the first hike that they've done. So we looked at this SPY. Let's get to the cues here. I'm getting distracted. Again, you still have that cup and handle pattern like action that's going on here right off of the 20-day moving average. So some similarities between SPY and the cues here. But yeah, you had the cup and handle pattern. Looks pretty good. Again, I think the double top here is a little bit less of a threat at this point in time, just because the price is just lingering around the highs. Like if it was going to, confirm it here, pretty quickly, it needed to start doing that yesterday, and it didn't. So that cup and handle pattern is still in play. Watch to see what it does around this 372, 373 area. Again, you have rising trend line off of the March lows. That's also still wouldn't surprise me in the next month or two if we do see a pullback to this level here. I think it's almost desperately needed at this point in time. But like what we've seen throughout 2021 and 2020, stocks can get very much disattached from existing trend lines for a very long time before they come back down and retest it. Probably one of the best examples of that was NVIDIA, when, you had some trend lines here where it just never got back to testing it for a long time. Like when you look at NVIDIA, this trend line started back in mid-2019, came back down, tested it, and then just launched higher, came all the way down, tested it again, and then launched even higher. So yeah, we're kind of way off of this trend line. But also what I noticed too is when you get extremely detached from a long-term trend line, it tends to, when it does come back to test it, it's not always going to hold up very well. So the Qs, for instance, however, look at this trend line. This goes back to 2015. It's held it on multiple occasions, but man, we almost got to it back in 2022, but no cigar. We just popped right back up. So at some point in the future, yeah, I would expect that we would test this rising trend line. Maybe it's much higher at that point in time, but I don't have a lot of faith in the markets right now. I would not be surprised at any point in time for the top to be put in. But because we've been so bullish lately, the market's been so bullish, it doesn't do me any good to say, well, it should be going down, so I'm going to go short the market, because that's just going to result in losses. You need to actually see the market turn over, and until that happens, you can't really get too excited about it. I see you there, Eric Duvall. Yeah, we'll look at Meta for sure here. So what I want to do now, we've talked about the Qs. I want to look at the IWM and then get into the sectors. IWM is one of the most promising index charts out there right now. You had this base pattern here. This is the base pattern. We've been highlighting this for over a month. Really nice basing pattern. Broke out, came back down, tested it. Almost looked like it was going to test it again. It tested the 200-day moving average, though, and then broke through this huge layer of resistance that I've been talking about for a while now. But that was a big layer of resistance. It wasn't a clean layer of resistance, but it was a significant level nonetheless. It broke through it today, and so now it sets up for either a possible retest of this broken trend line, which I don't know how strong that's going to be. The only thing that concerns me about it is that the previous time we tested it, that was back on June 14th. It did see a sharp rejection there. So as we get closer and closer to this yellow line here, this major resistance level, that's what I really have my eye on the most. That's what I'm most concerned about. 195, 196. It'd be nice to see IWM try to break through that level, but I still have a third of a position in IWM, so I definitely want to see it continue to rally higher going forward. All right. let's look at some of these sectors here. So the sectors are so important because I use a top-down trading strategy, and it's not enough just to know that the market's bullish or bearish. It's also important to know which sectors are rallying the market, because when you go back and look at the sectors by each year, when you look at 2023, what do you see? You see technology, discretionary, and industrials, 34%, 21%, 14% respectively. I know this is a little bit of an eye chart here, but if you can see it, that's great. But you have 8 sectors underperforming the overall market, and you have utilities that are still in the red. Energy just went red this week. So the point here is that not everything rallies in a market rally. In fact, this year is probably the best example of that, where you have so many stocks just concentrated. All the gains are concentrated in tech and discretionary and industrials. And if you look at 2022, for instance, you didn't have as much as that. You did have energy that just went absolutely ape, but most of the other sectors traded lower with the market. Again, in 2021, when you look at that, you had a lot of stocks or a lot of sectors that rallied in lockstep with the overall market. But this year, you're not seeing that as much. So it's important to know which sectors, which industries are rallying the market, because even in tech, you can have software application and software infrastructure rally in tech, but not semiconductors. Not always, but sometimes. And vice versa. Got to throw the vice versa in there. Okay. Now, looking at XLE here. This was the big one here today. This was the one that led the market, but more importantly was the technical development. To the downside, this rising trend line has been a little bit of a mess here, especially over the last month and a half. Finally, we got some resolution here. We had this decline trend line going back to the beginning of the year. It broke through it today. That was a big deal. So now that opens up the door for some other opportunities. I didn't jump on it on XLE as much because I didn't really like the stop loss. If I was getting in at around like $82, $83, I didn't really necessarily want to be using like a 5% stop loss to the downside. So energy is probably one of the hardest sectors to play out of all of them because there's so much more ability. You have you could see oil up 5-10% in a day, and then all of a sudden by the end of the day it's only up 1 or 2%. And if you're chasing some of those moves, that can result in some pretty hard reversals on your portfolio. So energy, it's really good right now. I like it a lot. XLC looks like a little bit of a breakout going here as well. You have this rising trend line. It's bounced off of that rising trend line. That's very important there. So you have a breakout right there unfolding too. That one looked very promising. So far we've done 2 sectors and 2 of them look really good. XLI is going to be the next one. It's an existing trend. When we did one of these live streams before, I was just talking to you, hey, watch this breakout right here. Look how well it performed. That's why it's so important to target the sectors that are actually breaking out with the overall market, because stocks like Honeywell, for example, that's the one that I got into there. I'm up a good chunk in that one. That's been a nice trade for me ever since. And then looking at XLR, we got real estate. This one's starting to break out as well. Now, not all of them are breaking out. We're going to get to a number of them that aren't worth our time right now. But real estate, not bad. It's breaking above that resistance. It tried to do it last week, didn't really hold it, but today, much different look to it. Very promising. Now, utilities. What do I think about utilities? They're sideways. Why would I trade utilities right now? Yes, it was up 1.2%. That's great. 4th strongest sector. But overall, the chart doesn't look like much to me. Overall, the chart looks more like a topping pattern. This is just like a dead cat bounce. When you get into materials, I want to liken materials. I do. This little breakout here was quite a nasty head fake for a lot of stocks. You get a breakout, it goes from 83 all the way down to 79 within 3 days. That was very disappointing. Well, actually within 2 days. And now it's trying to make its way back up here. And I don't know how serious to take this breakout. I'm not sure I like it. I'm very indifferent towards materials. And then you got XLF. Now, XLF has something promising going on. It's actually trying to break out of this, whatever you want to call it, this like little bearish wedge here. It's trying to break to the upside. And so that's actually makes the bearish wedge almost irrelevant. I'm going to change the colors on these just so it looks more distinguished. This channel is why I haven't really been trying to trade too much of the technicals or the financials. I've done PayPal, which is not quite like a JP Morgan or anything else, but still trying to break out. That's good. But the only problem with that, then you got earnings this Friday. I'm not too big on wanting to play the earnings on the financials. I don't like playing the earnings on any stocks, and I don't do them. So when it gets within like that week out period where you're starting to see JP Morgan, probably not going to go trade financials. You just don't know what that downside is going to look like, especially after everything that we saw back in March, where everything had a complete meltdown. Whew, moving along, we got XLY. And so this one looks like a bull flag-like pattern here. So let's get rid of this little trend line here and just draw Bob Ross style. Just put a little happy bull flag right here. Say there's a little bit of a bull flag. I mean, some people might, question the how good I drew that there, but nonetheless, it's breaking out of it, and there's some promise there. There's some hope. It's a good look to it. The last time we got a bull flag out of XLY, it made a nice little run there. So we want to keep our eyes on discretionary. We want to keep our eyes on energy, communications, industrials, real estate. What we're not too crazy about is financials because of earnings, materials just because they've kind of beaten us up recently. When you look at healthcare, this ain't nothing for me right here. It's still in a downtrend. We can move on from this one. And then you got staples still trading sideways. What's the edge there? There's not an edge. There's nothing to play. And then, of course, you have, remiss if I didn't mention technology. So you have maybe a continuation triangle pattern that's trying to form here. Let's just get rid of that little line. Continuation triangle pattern trying to break out to the upside, maybe like 172, 173 area, upper 172s, 173 where it breaks out at. That looks promising. And then if you can get semiconductors to behave and everything, that would be nice as well. I got into AVGO yesterday. Hasn't been bad so far, but would like to see that one pick up a little bit, especially if the CPI comes in favorable tomorrow. With all that being said, what are we looking at here in terms of stocks? I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 stocks that I'll go over really fast, like lightning fast. DE, this is one that I like a lot. John Vierig, feller in the Discord today mentioned it. And I was like, man, that one sets up really good. Declining resistance needs to break through that one pretty quickly. UPS. Look at this, man. We didn't talk about UPS. They got that whole strike, the Teamster strike thing going on. I don't know what the status is on that one, but it seems like the stock is, for the most part, ignoring that whole thing. But left shoulder, head, right shoulder, tried to break out. Then you got the Teamster news, but then it resumed the breakout. Not too bad there. I still think that there might be a play. Maybe you can get up to like 198 there with a stop loss somewhere below this neckline there around 179. Then we have, I can't even read my own handwriting. Oh, LMT. As I write these things down and then I don't know what I wrote down because my handwriting sucks. Basing pattern here. This might not be my favorite one of the three, but I still think there's a potential breakout there. 457 probably for a stop loss. It's starting to sneak above. 200-day moving average could come into play. So I think time is on your hands here. Wait for it to break above the 200-day moving average and see whether or not it can't get back to the top end of this range. Maybe it can get up to that 493 to 500 level. Then on the energy side, you have OXY breaking this decline trend line here. Maybe if you can get a pullback here in the coming days, maybe at 59 and starts to bounce, that could be a good play. Stop loss below the recent lows right here. That would be below July 6th. Then you got Hess breaking out of its, I don't know, you call it a triangle pattern. There's some possibility there. Again, I think it's going to be the best served if we get some consolidation and then it moves higher. These are two more to watch rather than to jump into right away. On the communication side, CMCSA. Here we go with this one. You can see there's some resistance. I almost bought this one yesterday. The only thing that's kind of giving me some concern is that lack of a breakout. That gives me a little bit of heartburn. And then the lack of breakout today as well. Wouldn't mind seeing a little bit more aggressiveness out of CMCA going forward. And then you got OMC. OMC, nice layer of resistance there. I don't even know if I probably have traded this one before. It's been a long time since I have, but that resistance is worth watching for the breakout. Then on discretionary, you might be surprised. Tesla, huh? A couple of auto plays actually, but this rising trend line going back to May, this blue line, light blue line, holding up pretty well. Bounced off of it today a little bit. Like to see some follow through there with probably a stop loss below the 20-day moving average. Perhaps could probably make it a little tighter if necessary. Ford, what do I see in this one? Look at this. This isn't too bad. I mean, come on. If I can draw the, come on, man. There we go. All right, you got a little bit of a bull flag. Doesn't look bad. It's starting to break out of it. That could be a play for tomorrow as well, especially if it can dip a little bit early on. Get a nice, good, clean stop loss. eBay's breaking out. I don't think it looks bad. I mean, I think what it could really benefit more from is a little bit of consolidation here because I don't know if I really want to trade it with a stop loss below 43.50. Getting almost, I think at least 7% at that point. And finally, real estate. Real estate's always harder to find good plays in, but PSA, not too bad. I mean, it's a little choppy, but let's see if it can't break through this little basing pattern here that's developed in recent months. The only thing that kind of concerns me, does it just go from 293 to 314, gives you about probably like 5 or 6% in profits, and then it just starts to pull back again. That could be a hard one to trade to extract maximum profit from. All right, let's get into y'all's stuff here. Let's see what we have. First up, Eric. Let me sneak my face back up above this thing. He's saying, Ryan, appreciate what you do. Can you take a look at Meta? Sure can. So there's a lot of like, I don't know. I don't think that there's a lot of really good setups right now with the FANG stocks. I told you I tried to get into Google. That one kind of, slapped me in the face this week here. I think I got out 1/3 for a slight profit, and then I took the other 2/3 out for like a 2% loss. And I think overall it was like a 1.5% loss on the overall trade. So it wasn't bad, but it was just frustrating because I thought it started to look good there in the early going, and then it completely fell apart this week here. But good volume here coming in the last couple of days in Meta. That's a positive. You broke out of this range, and then what does it do? It just kind of consolidates again. I mean, it consolidated just to consolidate more. So really, this breakout is really just consisted of one day to the upside. That was really that great. Otherwise, we're just sitting in this range here, and you're waiting for it to get above that level of like 298, 299, and then you have like the 300 mark, which sometimes those century marks can create some resistance there. But Meta, I just don't really see much. I mean, I don't doubt that it can't go up to 350, but do I see an edge for trading it? I think maybe the only edge I see on it is if I was just to get it into it and then get my stop loss probably somewhere below yesterday's lows and just see if it'll break out and keep moving. That's kind of all I see. Maybe I would go below the lows from July 5th. Is that lower? Yeah, that's lower. So maybe I just put my stop loss below July 5th lows and see if this little consolidation pattern, if it can break out, if it doesn't have some legs to it. What do I think about shorting DB? Let's pull off that chart. Gotta be careful shorting the. Oh, geez. Deutsche Bank, huh? So for one, you got a lot of gaps in the chart, and that's because of the overseas influence on the chart. It trades overseas, so you're getting a lot of that overnight price action being filtered into the opening price. That can be a little bit, testy at times. You got earnings this week. So if JPM comes out really good and Bank of America comes out really good, and they survived from what it looks like, the whole crisis with the regional bank stuff pretty well. So there's a good chance that they lift all those other banks. Like if Wells Fargo comes out pretty good, you could get stuck in a pretty ugly trade that's running against you during hours that the market's closed. I'm not a huge fan of shorting these kinds of stocks, especially where you just see a lot of gaps in the chart. Not for me. I'm not saying that you can't, and here's the thing. I'm not saying that it can't be a profitable trade. It can be. But for me, what I'm always trying to do is I'm trying to reduce headline risk. I'm always trying to reduce how much I'm expose myself to loss when I'm going into individual trades, because the losses are the most important thing. How do I manage the losses? And this one here, especially when you're shorting it, probably has a little bit more loss than what we probably want to give it credit for. I mean, from a technical side, if we're just ignoring the gaps, I think that as it gets up closer to this upper end of this range at 1063, I think it provides the opportunity to go back down to 982. But again, we got earnings, starting up with the banks this week. So that's something to be concerned about. All right. Hey, Ryan, a little late to join. Curious of your thoughts on Riot and Mary. Yeah, I can look at these suckers, man. So Riot is off the charts. I mean, this thing's been going up really well. I think when you start to get into these trades that are really borderline parabolic, you could really say that this is pretty close to it. You got strong volume coming in. This is a stock that could continue to run. As traders, we don't really know how high it can run. Nobody does. I mean, we want to say, oh, this is definitely going to 25, or oh, this is going to, some people get grandiose ideas, this is going to 100. Whoever's right, it's more by luck than anything. So what we want to do is try to say to ourselves, what do we do to get out of it if it doesn't go higher than we think that it can go? So if we think it can go to 20, we have to assume, though, that we could be wrong. How are we going to get out and when? Do we really want to be saying to ourselves when it comes back down to $12.50, oh, I guess it's not going to $20, or I'm just going to wait till it gets up to $20? No. Maybe you get an opportunity to get back in if you get stopped out prematurely. That's okay. I've walked away from a lot of trades, and I was like, I feel like I did everything I could to maximize the profits, and it still went up afterwards. It took me out, and then it rallied. I didn't lose sleep over that because it's not about one trade. It's about making consistent trades over the course of time. But when you find yourself in one of these trades, it's a good thing. You, especially if you get in early, that's even better because everybody else is being emotional about it, not you. But you see this yellow line here, this yellow moving average. Those are the kinds of things that I look for. Is there a little bit of a tendency to close above it or to bounce off of it? And then here, I think you're seeing it here with the bounce off of July 6th, the bounce off of July 7th, and it's given it enough room to continue to run higher. I mean, right now it's at 1537. The day before it was at 1456. So there's a good chance it's probably going to be around like 1630 or 1650 tomorrow, somewhere there. I mean, it fluctuates all day long. But that gives you a little bit of a, okay, if this thing sells off tomorrow and it closes below the 5-day moving average, that's probably my cue to get out because it's done a great job on this run up holding that level. And then Mara. See, this is a good example because we were talking about Mara last week. And, again, I don't know how high it can go, but you see this 5-day moving average here, how it, when we started talking about it, it's held it. Now it can break it intraday, and you got to pay close attention to that because if it's a hard break below it intraday, you don't want it to be like, wipe out another 15% before the market closes. So you want to be sure that if you're starting to see a hard break below that moving average, that's one thing that I'll do. It's either, a close below or a hard break below intraday that'll cause me to get out, or maybe just I'll trim some of that position if it's a hard break below. But anyways, I mean, it's held it every single day. And so that's a good thing there. So for me, I would say to myself, I want to see it close below the 5-day moving average or I'm not selling. That's how I would approach it. So you have some resistance here. It looks like it might have cleared it today. This blue line, big time resistance. Yeah, it cleared it. It was like around 1722. That's how I drew it, at least. Pushed above it. So that's a good thing. Maybe it continues to go higher here. But overall, what I'm watching is that 5-day moving average. Again, the volume's still staying pretty strong. Good stuff, man. I'm glad for you. Amazon. I can talk about Amazon here. So at Amazon, there's some of this resistance here at 132. I got this little line just below 132, actually. Like 131.50-ish. So when I talk about there's like this, I don't know what the right word is, kind of like just a lethargic feel to Amazon and to some of these other mega cap stocks. You're seeing that. You're seeing that since June 22nd, where it had this big move and then it's consolidated ever since. It's not giving up any ground. I mean, it's holding this little short-term rise and trend line. That's pretty much the only trend line I can even find at this point in the short term. So it's holding that level there. It kind of closed below it yesterday, but bounced back today. So that's all good. And this was probably more to that rebalancing that was taking place in the Qs. But I think, if you get a hard close, let's say it breaks below yesterday's lows, that would probably be a reason for me to go ahead and get out of it from a swing trading standpoint. And then if it can break back above it, 131.77, that becomes much more advantageous to maybe see if we can't get 6-7% to the upside on it with a small stop loss. Not a bad chart. Hey, Ryan, coin. I am holding from 55. Let me pull up coin. Stop at 75. What's your take? CRM broke today. Oh, let me tell you something about CRM today. We'll get to CRM here just after this one. So, okay, you're in at 55, which great job here. Again, we were talking about like the 5-day moving average being a good way to just watch how the stock's behaving. Notice here, it has not closed below it. It has broken below it intraday, but it has not closed the thing. And today it's up another 9.6%. Strong volume today. And stop loss at 75. Yeah, I mean, you can see here, I mean, you don't get many of these on these moves, like these parabolic moves. So like right here, and then it comes down, pulls back some, and then it shoots right back up again. I might even for me, I might be putting my stop loss like 74.50. If it breaks below this level, I'd want to get out. Or if it closes below the 5-day moving average, I feel like, hey, I made a good run of it, 55 to 89. That's a pretty good move there. So I'd be watching that 5-day moving average, that yellow line, simple moving average too. CRM. So here's the thing. I'll tell you about Salesforce here. Yesterday, I'm looking, and it comes down to these two stocks. AVGO, I told you about me getting into that. It's not been bad yet. I think I'm up like 1% on the trade. Not bad. Okay, I'm happy about that so far. I get in, I think like 873. The other one I was looking at was Salesforce, CRM. I like Salesforce. This was originally the one that I wanted to go with. Why did I not get into it? This volume was so ridiculously low that I didn't have the confidence in the breakout. So I've seen it break out. I could have gotten into it. Looking back, I've been much better off getting into it. But that's some of the frustrations that can come with trading, is that it just doesn't work out sometimes the way you want it to. Sometimes you can dance around all of the gains and get the one stock that's not doing that great. Now, I still have a little bit of a profit in AVGO right now. Hopefully it persists into tomorrow. Hopefully AVGO is today's CRM tomorrow. But this consolidation, it broke out, but it did it on that low volume there. And you so badly want to see good volume. I think on my list of like 56 stocks that I was watching coming into this week, I think the volume buzz on it was like 50 out of 56. So it was really, really low. So I didn't take it. Then you got, what was it? Oh, it was the 9% price increase that they raised prices by. And that got that sucker running hard today. I mean, it didn't really do much outside of the opening, but overall, really nice. Now, the only thing I want to be concerned about here is it backfill that gap at all, especially if we get some weakness tomorrow off the CRM. That could be a prime candidate to see a little bit of backfill, because now you have like this shooting star. I shouldn't call it a shooting star. It's just kind of like I know the term for it. I can't remember if it's the hanging man candle or whatever, but typically you can see maybe like a gap lower tomorrow or some kind of like profit taking. I wish I could have seen the stock build on these gains today. That would have been the big deal right there, but it just kind of closed where it was at today. I know somebody knows what that pattern, that candle is, and it's escaping my mind right now. I just can't think of it. Let's see here. Since we are doing international, thoughts on ENEL. If I can pull up the chart, I will look at it. ENEL. Can't pull it up. Got like a different, that this one here. Inlay. Let's look at Inlay here, huh? It may not be the one, but this looks like an international play for sure. Some resistance right here overhead. I'm guessing this is energy, right? Does it list anywhere? I don't know. I'm not sure what. Yeah, I mean, I'm saying energy. That's got to be energy, I'm guessing. So, anyways, whether it's energy or not, I'll do the chart. Resistance, heavy resistance there. It needs to get back above this, really about this high 680. These are dangerous stocks, especially when they're below $10 a share. But that's what I'd be watching. Essentially just that. Yeah, I would say that. ARKW. Man. Kathy Woods has got like 9 lives, doesn't she? I mean, her ETF right now is rallying pretty well off of the January lows. It was trading at 35. Now it's at 63. But I don't know if that's really much of a testament. She's all in the tech. She lives and dies by tech, right? But she's made some really bad calls. For ARK right now, what I would be doing is watching this rising trend line. That's the trend line that I would want to be keeping a close eye on, because you can see where we bounced off of it multiple times. Now, today was a really good move. It jumped like 4%, 4.7%. And what we want to do is, does it continue to hold that? And if it does, then there's no reason to really jump out of it, because it's still in a bullish uptrend. So that's really what I'd be watching on that. All right, we covered Tesla earlier. Basically, I'm just looking at this one as a bounce off of that rising trend line there. ON. Yes, what was I looking at on ON? Just the other day, even. Maybe it wasn't ON. But what you have is this rising channel here. Nice, well put together rising channel. It's bouncing off of it consistently on the lower end. Hasn't tested a ton lately on the upper end, but it's made a higher high, so that's a good thing. Intraday, it made a higher high today, and then it pulled back some. If it was to pull back down to this 93.79, I'd like that. If it broke below it, I would want nothing to do with it. But it's a great looking one. AI. So you had this crazy breakout here, not your typical breakout, but nonetheless, I mean, it was a pretty big move there. What is this up like 9 out of the last 10 days or so? I mean, it looks like it. Pull back to the support level, not a clean pullback. It bounced though. At this point, probably again, I'd be looking at that 5-day moving average, watching for a close below it to get out of it if I'm in it. If I'm not in it, I don't really see a trading edge at all there right now. So thank you for that, Sam. I appreciate it. I forgot to put your message up there for everybody to see. Trust me, I don't mind sharing the lessons. Trading is messy. Trading does not work the way we would always like for it to work. It's very, very messy. It can be very discouraging at times. And that's why it's so important not to put all your eggs in one basket to where you've got to win on just one particular trade. Because when you get to that point and it disappoints, you're probably going to quit. So that's why, it's more important to be methodical from one trade to the next, not really caring what the symbols are or what the company is, just trading the charts. Let's see. I took your advice and sold all of the Netflix before earnings, but then got sucked back in today when the stock dropped $10 and I bought at the dip. I think I need to sell again before earnings. Yeah, I mean, here's the thing. Some people like the earnings and maybe they have a better methods than I have for handling earnings. I don't have a method for handling earnings. I just don't play them. That is my method. The reason why is because I can't predict. I don't know anybody that can really predict unless they have the insider information exactly what those earnings are going to be, or unless they get on the phone call with the CFO or the CEO and they leak the numbers to them. Netflix, I mean, we've seen Netflix just have absolutely atrocious earnings in the past. I mean, what do you think this big gap right here is? Still waiting to be filled. Waiting to be filled. If you play these earnings, you're still hoping that one day it's going to get back up to this, what it was like $500, and we're still trading below 300. That's significant. And so that's the reason why I don't play earnings. I mean, you look at Meta, yeah, it's made a big comeback, but look at this doozy right here. How long did it take for it to fill that gap? And so that's what you put yourself in a position of. Yeah, it's starting to fill the gap now. It's pretty close to filling it, but it took a long time. That money could have been spent elsewhere. So I don't like the idea of trading earnings and then all of a sudden I can be down 20, 30% the next day. So with NFLX, I would never trade it through earnings. I can't tell you what to do, but it's definitely a high risk play in my opinion. Now I'm glad. I mean, it's again what we're trying to do as traders. We're trying to make it and survive. Sometimes I feel like I'm technically challenged. Sometimes what we're trying to do as traders is we're trying to live to trade. We're trying to live to trade another day. We're wanting to manage the risk. The reason why I always harp on managing the risk is because the moment we don't do that, the moment we're just kind of at the will of the market to basically ruin us or help us. And what I want to do is when a trade doesn't go our way, when a trade doesn't play to my favor, I want to get out of it. I don't want to stay in it. I would have loved to have stayed in Google. I would have loved to have said, you know what, risk aside, I'm staying in this no matter what. But then I opened myself up for that catastrophic event that I could have avoided, whether it be earnings or whether it's a stock like NFLX that just continues to sink over time. And then all of a sudden you're waiting years to get that money back. Here's another one. We want to talk about lessons. Let's talk about some lessons. SQ. I traded this one twice last month. It pulled back to this breakout level, bounced, came back down. I got out of it, didn't make any money. I think I got stopped out of it for like a couple percentage loss. Got back in it again on this bounce, still went straight back down. It's gone up ever since. But this is what I'm trying to avoid. What if I would have done the same thing back when it was trading in late 2021? And it's like, I'll just, ignore the stop loss and hope that it, keeps coming back. Then all of a sudden I got 10% of my portfolio or 12% of my portfolio that just went from 261 a share down to 71. And that is a big loss. That is a catastrophic loss. So I don't want that. And especially if you're not managing the risk like you should be, then it gets even worse. Or in terms of position sizing, you're not managing the risk with your position sizes, it gets way worse. So that's the issue. That's the problem. So in any case, a good session with you guys. Make sure that you like and subscribe. I've tried to do these things about twice a week, and got another one scheduled for Thursday. So make sure you guys are there for that. I'll keep going through all of your charts. Don't mind doing that. Oh yeah, I forgot to pop the chart back on there. Let me go ahead and this is what I was talking about on SQ. My bad. Every once in a while I do that. I forget to put. They yell at me all the time in the trading block about it. But what I was saying about SQ is that I can get in at. What if I would have done the same thing with SQ where it rallied, came back down, rallied again, stopped me out twice, and then it takes off? What if I would have said, oh, you know what? I'm not going to let that thing take off on me again. I'm going to hold on to it. And then back in late 2021, it goes from 268 all the way down to 71. I'm still trying to recover from that with no hope in sight. And so that's why it's so important, because I don't want to get stuck in these kinds of trades, because it just takes the whole life out of your portfolio. Can I look at Apple? Sure can, man. Anything for you, Skyheart. So with Apple, this is one that could be in play for tomorrow, especially if you're looking to add like a tech. I'm not crazy about trading $3 trillion companies. I'm kind of like, okay, how high is this really going to go? Am I really going to see, 50% increase here, 40%? From a long-term perspective, not interested in it. Long-term perspective on Apple, I could get interested in maybe if it dropped back down to 154 or down to 125 again. Probably should have bought some when it was at 124. But this rising trend line here is really what I'm wanting to see for like a short-term pop. Can it bounce? You're off of the overbought conditions in the short term. You've sold off, 5 out of the last 6 days. It could see a bounce here. You got a little bit of support with this yellow line. You got this rising trend line. It's holding that. I think it actually looks pretty good from a quick bounce play, especially if this market survives the CPI report tomorrow. So in any case, like I said, guys, oh, you got more questions, man. All right, I'll keep going through them. What do you think is a good portfolio size if you aren't willing to hold on to losers? What do you think is a good portfolio size if you're not willing to hold on to losers? I don't know if I quite understand the question in the sense that I think regardless of what the portfolio size, if I'm trading with $10 and I can trade with fractional shares at $10, I mean, you can open up a Fidelity account. I don't know what their minimum actually is, but to me, I want to be just as disciplined trading a little as I would be with a lot. That would be my question, or my answer to the question. So anyways, glad to do this live stream. I always look forward to Tuesdays and Thursdays doing these. I feel like I get a lot out of it. Some of them are good reminders, like remembering about this Apple trade for tomorrow. That could be a good bounce play if everything lines up. But like I was saying though, it's like, can you live off of small gains? No, but what we're trying to do as traders is become disciplined traders. If you're trading with $100 account or $1,000 account, you're not going to be able to live off the profits there. I mean, trading a small amount 10 years ago you wouldn't have been able to do it, just because the commissions would have just ate you alive. But now, because we're commission free, yes, you can trade those things, but you got to still manage the risk. Whether if you can't do it with a little bit amount, what are you going to do when you trade with a whole lot more? You're likely to still be undisciplined. And so we're not doing it when we're trading with like a small amount. We're not necessarily trading it to get rich or to be able to put food on the table. We're trying to learn, because the more you practice, the more trades you get under your belt of being disciplined in your approach to trading, and more confidence you build in your approach to trading, the better you're going to do when you are trading with real money. So in any case, glad you guys could show up. Again, like, subscribe. Leave me something in the comments if you guys have any other questions that I didn't answer, and I'd be happy to take a look at them too as well. So thank you guys. God bless.